Hello everyone and welcome to this episode of PhillipCapital Market Watch. I'm Serena, Research Analyst at Phillip Securities Research. Today I'll give a brief overview of Alphabet, covering the recently released second quarter results, post-earnings stock performance, and outlook. Let's get into it. Alphabet just delivered its second quarter financial results with revenue surging 24% year-on-year to $119.8 billion, marking Alphabet's 12th consecutive quarter of double-digit revenue growth. EPS exploded to $9.11, driven by non-operating unrealized mark-to-market gain in equity stakes like SpaceX. Adjusted EPS landed at $2.85, implying a 23% year-on-year growth. Let's break down core segment. Google advertising business remained resilient with 14% year-on-year growth to $81.6 billion. Search revenue increased 17% year-on-year to $63.3 billion, driven by the retail and financial services sector, while YouTube advertising grew 13% on continued strength in Shorts and CTV. Paid clicks has now delivered double-digit growth for 3 consecutive quarters, reaching 13% year-on-year compared to just 4% a year ago. We believe this suggests that Gemini integration is improving ad relevance and user engagement. Google Cloud segment reported the fastest growth. Revenue surged 82% year-on-year to $24.8 billion, while operating margin expanded to 35.6%, supported by strong enterprise AI demand. At the moment, 90% of Fortune 100 companies are adopting Gemini Enterprise. Another encouraging indicator is backlog, which grew 4 times to $514 billion, with the majority still comprising GCP contracts. Due to ongoing supply constraints, Google will increase the use of third-party compute capacity starting in the third quarter to accelerate customer deployments. While this may temporarily weigh on margins and revenue recognition, we remain positive on the long-term outlook and expect Google Cloud revenue to grow 72% in financial year 26. Besides the strong results, Alphabet raised financial year 26 Capex guidance by 8% to $195 billion to $205 billion and signal a further step up in financial year 27 to expand AI compute capacity and meet growing demand. Although operating cash flow grew 41% year-on-year to $39 billion in the second quarter, the company quarterly Capex doubled to $44.9 billion with investment directed towards server and networking equipment, resulting in the first ever negative free cash flow of $5.9 billion. Alphabet's stock price dropped roughly 7% post-earnings, released despite the better-than-expected performance due to higher Capex forecasts. However, we do not view the negative cash flow as a sign of weakening fundamentals. Instead, we see it as the inevitable consequences of Alphabet AI investment cycle to support long-term growth. We also believe the company still generates very strong operating cash flow. Together with recent debt and equity offering shows Alphabet funding capabilities should provide sufficient financial flexibility to support this investment. In addition, we see potential IPOs for OpenAI and Anthropic serving as a positive catalyst for Alphabet by providing clearer valuation benchmark for Gemini and offering balance sheet upside via Alphabet equity stakes and cloud computing agreement with Anthropic. We remain constructive on Google long-term outlook and have a buy recommendation with a target price of $425, and its vertically integrated AI ecosystem should continue to support robust growth across both ad and cloud businesses. That's all for this episode of PhillipCapital Market Watch. I hope the insights shared today will be beneficial for your investment journey. Don't forget to like and follow us on our social media handles and subscribe to our YouTube channel. Thanks for joining us and see you soon.